It is an investment holding company with subsidiaries operating in the supermarket, produce, distribution, furniture, retailing and property holding industries.
The retail chains include Medi-rite, which is following our theme. This is obviously at the back of the big Shoprites. They have a big sort of chemist, which is similar to a Clicks setup where you walk through a lot of the consumer goods, and then at the back is the actual pharmacy where you can buy over-the-counter products.
We're talking about some of the recognizable brands here: Checkers, OK, Hyperama, Freshmark and Centra. Market cap 95.5 billion rand, a PE ratio of 22.9, dividend yield of 2.16%. Why we've put this as a stretch through the
it's a little bit diluted in Shoprite.
Yes, but I
side.
suppose let's talk about the overriding theme with Shoprite is a positive one.
Yeah, look, the Shoprite is actually a good news story. I mean, understand they've been very successful, largely at the expense of Pick n Pay over many, many years now. Pick n Pay is fighting back, but Shoprite has been very successful. They've gone into Africa, had a few setbacks, couple of fires happening here and there, and selling this, buying that, but they've also been very successful in that. Within Shoprite, obviously the pharmaceutical side is truly small, but looking at their last results, not a bad result from the pharmaceutical side of the business, fairly acceptable result.
Is this going to be a growth kicker going forward for the group, Medi-rite?
I searched Medi-rite in their latest results and it came up once. So it's not really a huge, priority at this stage.
You guys really are stretching the theme. Is that what you're telling me here?
Yeah, I think it's a big stretch. But, all in all, the Shoprite theme is an exciting one. Over 20% of profits coming now from the rest of Africa, the biggest African retailer. And I think, that portion is going to become more and more significant, and as you can imagine, if they're pushing those pharmaceuticals and beauty products into the rest of Africa, where I'd imagine it's pretty undersupplied, the uptake of that will be extremely well received.
Would you be putting new cash into Shoprite at this stage?
Here's the problem with Shoprite. It's growing its earnings, but it's growing its earnings at relatively mediocre pace. They're growing at 10-11% in their last set of results, which is not bad. I mean, certainly not disastrous, but does 11% earnings growth justify a 22 price earnings ratio? That's the real question.
We come back to that problem that it's priced for perfection.
It's the share valuation, yeah.
It's priced for perfection.
Now, last year almost for the whole of last year, the retailers, including Shoprite, were not badly priced. I thought the price more or less reflected the current consumer environment. But this year, foreigners have come in like crazy and bought all the retailers. It's not domestic asset managers buying it, it's clearly foreigners.
But this is not a foreign theme, excuse the pun, because the foreigners love our retailers.
Yeah, they are picking them up. I mean, the ownership, in the last 5 odd years, the ownership of our industrial bourse, which is dominated by Naspers and the retailers, has increased. It's almost doubled. So the foreigners clearly are piling in here, and unfortunately, I just can't justify, given the outlook, paying a 22-23 price earnings ratio for Shoprite.
Can you justify the price to earnings ratio here?
Well, there's a reason now the foreigners like our retailers. It's because they're world class. We have great businesses in South Africa and great retail experiences offered. If you have a look at the Shoprite share price, if you had bought Shoprite at the end of 2012, you'd actually still be down on the investment. So we've seen a bit of a PE unwind. It's the cheapest Shoprite has looked on a fundamental basis. And I have a feeling that earnings we've seen, that earnings growth that Wayne mentions of 10-11%, is on the back of quite a weak consumer, especially lower end in terms of South Africa. And I understand that I know the petrol price has picked up a little bit, but South Africans have sort of normalized to the weaker rand that we've seen, and the consumer has looked a bit stronger. We've seen that coming through in the earnings of other companies. So I think we're going to see stronger earnings growth coming through from Shoprite, and I think this presents a decent buying opportunity into a quality business.
The question, Wayne, perhaps to put to you is there opportunity here that we're going to see the stock getting cheaper?
Look, it's at the end of the day, Shoprite is still by and large tied to the South African consumer. We know there's no new jobs. We know our economic growth this year, I don't even think we're going to get 2% this year, quite frankly. And my own personal opinion, but it's shared by a couple of people, I think we're going to see incredible labour unrest this year. I think we're going to see a horrible winter with strikes and that. And you know, if Shoprite was a 16 PE, a 15 PE, you'd buy it. But at a 22, I can't be hot on it.
A very, very bearish Wayne McCurry.
Unfortunately,
Byron, can
yes.
you come back from that, or should we just leave the set right now and pack our bags and leave the
Move
country?
to England or
Exactly,
something. Yeah.
exactly.
No, I'm more bullish, as I'm sure you can see.
So hot or not?
I'm hot on Shoprite. I do prefer Woolworths in the sector because of their international diversification and better mix. But I remain hot on Shoprite.
Can I ask you? You're not hot
Not
on this
hot,
one?
no.